Happy Monday. Today is December 22nd, 2025, and this is your Monday market update, the second to last one of the year. Now, before we get into the numbers, a quick framing note. Last week had a very familiar year-end feel to it. Early weakness, growing doubt about leadership, a lot of second guessing, and then just when confidence felt the thinnest, a reminder that markets don't move in straight lines. Now, let's recap last week and let's preview what's ahead. The week opened cautiously as investors continue to rotate away from the most crowded parts of the AI trade. Mega cap tech weighed on the broader market, while more defensive and economically sensitive areas quietly attracted interest. There wasn't a single headline that was driving the tape. This felt more like positioning. Investors waited for confirmation are waiting for confirmation from the jobs, inflation, and earnings later in the week. Breadth narrowed, volatility picked up, and the conviction was thin. The Dow was down 0.1%. S&P 500 was down less than 0.25%, and the Nasdaq was down just over 0.5%. Tuesday brought the delayed November jobs report, and the takeaway was sluggish but not cratering. Job growth exceeded expectations, but the unemployment rate ticked just a little bit higher, reinforcing the idea that the labor market is cooling, not collapsing. Markets struggled to find direction as investors debated whether softer data is still good news for stocks at this stage of the cycle. Bond yields steady, rate cut expectations for 2026 remained intact, and equities finished mixed. The Dow was down 0.2%, S&P 500 down 0.25%, and the Nasdaq was up just over 0.25%. Wednesday was the most difficult session of the week. Stocks sold off sharply as renewed concerns surfaced around tech valuations and the sustainability of the AI-led rally. Reports that financing fell through on a major Oracle-related data center project reignited questions about return on investment and balance sheet strain across parts of the AI ecosystem. Once key technical levels gave way, selling accelerated, geopolitical headlines added to the unease, and risk appetite was clearly on the defensive by the close. The Dow was down just under 0.5%, S&P was down a little over 1%, and the Nasdaq was down nearly 2%. Thursday marked a clear inflection point. Cooler than expected inflation data showed both headline and core inflation decelerating to the lowest levels in nearly 5 years. That helped reset expectations for the Fed's 2026 path and gave markets some breathing room. At the same time, strong guidance from Micron provided a timely boost to battered AI sentiment. To the rescue. Growth stocks led, defensives lagged, and markets began clawing back earlier losses. The Dow was up almost 0.25%. S&P was up over 0.75%, and the Nasdaq was up close to 1.5%. Friday extended the rebound. AI stocks found firmer footing. Big tech regained leadership, and markets closed the week on steadier ground despite lighter year-end liquidity and a records option expiration. This wasn't a euphoric rally. It was more constructive, more stabilizing than celebration. The Dow was up just about 1/3%. S&P was up nearly 1%. And the Nasdaq was up about 1.33%. For the full week, the Dow was down about 0.75%. S&P up 0.1%. The Nasdaq was up 0.5%. Small caps lagged. International markets were mixed, and the leadership continued rotating beneath the surface. It was another reminder that index level calm can hide a lot of internal movement. In fixed income, bonds posted modest gains as yields fell following the inflation surprise, reinforcing that most bond returns right now are coming from income, not price appreciation. Commodities were mixed. Oil remained under pressure, while gold and silver continued to shine as inflation expectations eased. Previewing the coming week, this is a holiday-shortened week, and that matters. Markets close early Wednesday and are closed on Thursday for Christmas, with no major data scheduled for Friday at all. Liquidity will thin quickly, which means price moves can look larger than the underlying fundamentals justify. From a macro standpoint, tomorrow, Tuesday, that's the key day. We'll get a heavy batch of delayed data, including Q3 GDP. That's going to be the second estimate there, expecting to show solid growth in the mid 3% range. Personal consumption and core PCE reinforcing a cooling inflation trend. Recall, this is the Fed's favorite piece of data. Durable goods orders with headline weakness likely driven by aircraft orders, but core capital goods remaining positive. Industrial production and capital capacity utilization, conference board consumer confidence, that's all going to come. Then jobless claims are going to follow Wednesday morning, offering one of the final labor market reads before year end. Notably, there are no scheduled Fed speakers this week, leaving markets more data driven and less headline sensitive than usual. Bottom line, this is a week where macro confirmation matters more than market movement. With thin trading after Tuesday, perspective does matter more than price action. Remember, this week and next are holiday shortened weeks. Players will be away, volumes will decline, and moves will become more amplified in either direction. It's not the time to make make emotional investment decisions, stick to the plan. Now, as we head into the holiday week, it's also a meaningful one on the calendar. Today marks the final day of Hanukkah, and later this week we'll celebrate Christmas. Both holidays share a powerful theme: light in uncertain times. Not the kind that erases challenges, but the kind that helps us see more clearly and move forward with intention. Markets move the same way. Periods of volatility don't signal failure, they create contrast. They remind us why discipline matters, why long term thinking matters, why reacting emotionally rarely leads to better outcomes. As trading slows and the year winds down, this is a good moment to step back, take stock, pun intended, and focus on what matters most: family, gratitude, perspective. From my family to yours, I want to wish you a meaningful conclusion to Hanukkah, a joyful Christmas, and continued clarity as we head into the new year. Have a great week.